As of 11:18 a.m. Eastern Time on October 3, 2025, Big Bear AI Holdings, trading under the ticker BBAI, is priced at $7.27 per share. The stock is currently flat for the day, showing no percentage change, but the stillness in price belies a significant amount of underlying activity. The shares have already traded hands over 30 million times today, fluctuating between a high of 737 and a low of 705. This level of volume suggests a tense equilibrium between buyers and sellers, a pause in a much larger and more volatile story. And while many retail investors are looking at that flat line and perhaps losing interest, they are missing the far more important picture unfolding beneath the surface. The expectation is that BBAI is just another high-beta AI name, a stock to be day traded on whims and sector momentum. The reality, however, is that recent institutional movements and the company's deepening entrenchment with the U.S. Department of Defense signal a strategic repositioning that the market has not fully appreciated, creating a stark divergence between the daily noise and the long-term potential being built behind the scenes. The common belief, especially those making quick trades on their Robinhood app or through SoFi Invest, is that BigBear.ai is a smaller, less proven version of Palantir. It's seen as a speculative bet on the artificial intelligence sector, a high-risk, high-reward play that lives and dies by broad market sentiment toward tech. When you see names like NVIDIA stock having a strong day, the assumption is that the whole sector, including BBAI, should rise with it. This view isn't entirely wrong, but it is dangerously incomplete. It's an expectation built on surface-level comparisons and headline chasing. The deeper reality is that BigBear.ai is not just a software company, it is fundamentally a government contractor, navigating the treacherous but potentially lucrative waters of federal procurement. Its stock performance is less correlated with the consumer-facing AI hype that drives a company like Apple stock, and far more tethered to the often opaque, lengthy, and complex process of winning multi-year defense and intelligence contracts. The recent surge in trading volume isn't just retail speculation, it's a reflection of a quiet but significant accumulation by institutional players who understand this distinction. Filings have shown major players increasing their stakes, a sign that sophisticated investors, using platforms from Interactive Brokers or relying on Fidelity Wealth Management, are looking past the quarterly revenue misses and focusing on the growth of the company's backlog and its strategic importance to national security. Let's dissect the stock movement with more precision. The climb from its 52-week low of around $1.47 to its high of $10.36 was not a smooth ascent. It was punctuated by extreme volatility driven by specific news events. For instance, the announcement of a pivotal contract with the DoD's Chief Digital and Artificial Intelligence Office to advance its Vane prototype for geopolitical risk analysis caused a massive spike. This wasn't just another press release, it was a validation of its technology at the highest levels of the Pentagon. Conversely, the stock has been punished severely for its financial performance. The last earnings report on August 11th was a significant disappointment, with revenue of $32.47 million missing estimates by nearly 20%. This is the crux of the expectation versus reality dilemma for BBAI. The market expects smooth, predictable growth like a mature software-as-a-service company, but the reality of its business is lumpy contract-based revenue. A delay in a single large government program can cause a quarterly miss that sends short-term investors fleeing, even if the long-term backlog is growing. This creates opportunities for those with a longer time horizon, who manage their individual brokerage accounts with a focus on fundamentals over sentiment. The recent quiet period, with the stock consolidating around the $7 mark, represents the market trying to price these two conflicting narratives, the weak current financials versus the strong contract-driven future. So what does Big Bear AI actually do? The company provides AI-powered decision intelligence solutions. In simple terms, it builds complex software that takes in massive amounts of data from disparate sources, think satellite imagery, intelligence reports, logistics data, and helps human operators make faster, better decisions. The company operates in two main segments, analytics and cyber and engineering. The analytics segment is the core of its future, housing its AI platforms that serve clients primarily in the U.S. intelligence community and Department of Defense. The cyber and engineering segment provides more traditional government IT services, offering stability and consistent, albeit lower margin, revenue. This dual structure is key. While the market is fixated on the high-growth AI narrative, the engineering side provides a foundational business that helps fund the innovation.
The company came to the public markets via a SPAC merger, which partly explains the persistent volatility and skepticism from some corners of the market. Early investors in SPACs are often looking for a quick flip, and that initial selling pressure can create a lasting overhang on a stock's reputation, one that can only be overcome by consistent operational performance. For those seeking investment help or using services like Schwab Intelligent Portfolios, a stock with this kind of history and risk profile might be automatically filtered out, yet that is precisely why a deeper look is warranted. Looking at the financials, the picture is challenging, which is where the primary risk lies. BBAI is not profitable. Its earnings per share, EPS, is a deeply negative $1.59. Revenue has been declining in recent quarters, and the company is burning through cash. This is the stark reality that bulls must confront. The path to profitability is not yet clear and will likely require either a significant acceleration in high-margin contract wins or further capital raises, which could dilute existing shareholders. Shareholders have already been substantially diluted over the past year. This financial fragility is the single greatest argument against the stock and what keeps many potential investors on the sidelines, perhaps opting for more stable Fidelity ETFs or blue-chip tech names instead. The bull case rests on the idea that these losses are investments in building a technological moat and securing a position within the massive multi-decade spending cycle of modernizing the military with AI. The company's nearly $500 million backlog is the key metric to watch. While much of it is unfunded, converting even a fraction of that into recognized revenue would dramatically alter the company's financial trajectory. Comment below with what you believe BigBearAI's revenue will be for the full fiscal year. The future outlook contains several distinct possibilities. The optimistic scenario sees BBAI successfully leveraging its recent DoD contract wins to become an incumbent provider for critical AI infrastructure within the Pentagon. If its Vane prototype becomes a program of record, it could unlock a steady, multi-year revenue stream that would stabilize financials and force a complete re-rating of the stock. Further expansion into commercial markets, although nascent, represents another significant growth vector. If they can translate their expertise in defense and intelligence to commercial logistics or manufacturing, the addressable market would expand exponentially. This is the future that long-term investors are buying into when they add BBAI to their portfolios on a Fidelity trading platform or through interactive brokers. The pessimistic scenario is that the cash burn continues unabated, competition from larger, better-funded rivals like Palantir and major defense primes proves too intense, and the company's backlog fails to convert into profitable revenue at a sufficient pace. In this version of the future, BBAI remains a niche, struggling government contractor, and the stock price could revisit its prior lows. Continued revenue misses or the announcement of another dilutive financing round would be major red flags. This is why position sizing and risk management are critical for anyone attempting to invest in a company at this stage of its development. You don't make an online investment like this without being fully aware of the potential downsides. In summary, the story of BigBearAI is a classic battle between a difficult present and a promising but uncertain future. The expectation, driven by the ticker and the AI in its name, is for a high-growth tech stock. The reality is a company deeply embedded in the government contracting world with all the lumpiness, delays, and binary outcomes that entails. The stock's current price reflects this tension perfectly, balancing on a knife's edge between its weak income statement and its impressive growing backlog of federal contracts. While day traders on the SoFi trading platform or the Robinhood stock trading app might be focused on the intraday chart, the real narrative is found in SEC filings detailing institutional ownership and press releases announcing new government partnerships. The disconnect between the market's simplistic view and the complex operational reality of the business is where the opportunity lies for those willing to do the work. The path forward will be volatile, but for investors who can stomach the risk, the potential for BigBearAI to carve out a critical niche in the national security AI landscape is very real, and is what makes this one of the more fascinating stories in the small-cap market today.